Hello and welcome. Good afternoon. You're watching Market Fatafat on ET Now. I am Snehisha. With me as always is Ankita Saxena. And this is a show where we'll be taking you through all the big buzzers in today's trade, tell you why these stocks are in focus, and also bring on technical experts on board to give you a tech check on some of those stocks. Lots of stocks to talk about. You have a lot of earnings that have trickled in, lots of news flow coming in. But before we do that, let's delve into the market and take a look at what's been happening with the market. We're firmly above the 24,250 mark for now. Remember, at one point in the day, we had seen quite the slip coming in around 11 a.m., but we seem to have recovered from the day's low, Ankita.
Absolutely, we have recovered smartly on the Nifty. We've recovered almost 0.5% on the Nifty, so we are comfortably above the 24,250 levels. But same cannot be said by Nifty Bank, because Nifty Bank is still reeling under selling pressure. We are trading with cuts of 0.5% on the Nifty Bank. Now we have seen Nifty Bank surge, in the last 6 sessions. So Nifty Bank is taking a breather here, perhaps hopefully for gearing up for an up move. But for now, it's trading with cuts of 0.5%. Sectorally, we have the Nifty IT, of course, that's been, bucking, has been doing pretty well since morning. In fact, it is holding fort. Since morning, it's trading with gains of more than 4% in trade, and the credit goes to ACL Tech. That's been doing very well. It's trading now 8%, and that's really buoying the sentiment for the entire IT pack. And so the entire IT pack, Coforge, Persistent, TechM, LTI Mindtree, they're all trading with gains of upwards of 4% odd. Nifty Auto and Realty is also now picked up pace, because they are, in fact, Nifty Auto is up 1.4% now. We also have Nifty Realty that's in focus, that is trading with gains of 1%, and Nifty Pharma has also picked up pace. That's also up 1% in trade now. On the losing front, we have Nifty PSU Bank. From within the banking pack, we have the PSU banks that were clearly outperforming till now are taking a breather. Canara, PSB, Bank of India, they're all trading with cuts of 1.3% odd. But a couple of further names that are doing well, besides HCL Tech, this TechM, Wipro, Infosys, these counters are really one of the top Nifty gainers. So the entire IT pack is really pulling up Nifty as of now. Market breadth, if you look at the market breadth, well, that is even Steven. It's actually, it's I can't really say that it's in the favor of advanced declines, because it's even on both the sides right now. So at this point, we are trying to recover. Some of the counters, as I can say, are recovering.
Absolutely, it's the day of the IT stocks today. But on that note, let's welcome on board Akshay Bhagwat, the Senior Vice President of Derivatives Research at JM Financial Services, on the technicals. And from our in-house research team, we have Gaurav as well as Ravinder joining us. Good afternoon to all three of you gentlemen. Let me kickstart the show, talk about a stock that's been doing very well in today's trade on the back of its quarter four earnings, and rather strong earnings. Is Cyient DLM in focus today. Reports, the company has reported its best ever quarterly performance. Quarter four PAT is up 36.6% on a year-on-year basis, and this has been the company's best performance since its listing in July of 2023. Let's talk about the revenue. Revenue has come in at 428 crores compared to 362 crores, an uptick of 18.3% on a year-on-year basis. This has been driven by strong demand in the aerospace segment. Net profit, like I told you, 31 crores compared to 22.7 crores, a healthy uptick of 36.6% on a year-on-year basis. EBITDA has come in at 57.2 odd crore rupees compared to 29 crores. This is also doubled on a year-on-year basis, almost double. And EBITDA margin also a sharp spike coming in at 13.4% compared to 8%. Segment-wise performance also showed a 43% year-on-year decline in the defense segment revenue, primarily due to lower contributions from its top customer. In contrast, it was the aerospace segment that saw robust growth of 53%, driven by major clients. According to the company, the acquisition of Altec also significantly contributed to the year-on-year growth in its top line and bottom lines. Looking good for Cyient DLM. That stock is up by 4% as we speak.
Alright, moving on from Cyient DLM, Akshay, you picked out Sun Pharma for us. Tell us what you see on the charts for this counter. This hasn't done much, in the last 6 odd months. What do you see on the charts for this?
Good afternoon. Well, if you look at the pharma pack today pharma pack is in the limelight. Many of the stocks in this sector is doing great. Sun Pharma is particularly the price structure which I like from a short-term trading perspective. If you were to look at the weekly charts, there is a strong basing formation seen at the levels of around 1650, and on the daily charts there is strong momentum pickup. There is a small resistance at 1822, but broadly my target projections are that the stock is heading for levels of 1875. So 1750 is a support zone. continue to be on the long side of trade with projections of 1850, 1875. Stop losses on buy position will be below 1740.
All right, moving on then, moving to the next counter, which is HCL Tech. Let's see what's HCL Tech doing. It is, of course, the front runner as far as the IT pack is concerned. That one counter that's really pulling up, the rest of the pack as well as HCL Tech, trading upwards of it's touched almost 8% now. But let's take a look at what the numbers look like. If you look at the scorecard for HCL Tech, it's an overall inline set of numbers coming in. Revenue is in line, EBITDA margin in line, and PAT in line. All three of them are in line. Revenue is seeing an uptick of 1.2% on a sequential basis. PAT saw a decline of 6.2%, but it was well within what we were expecting. The EBIT margins was down 6.5%. The EBIT was down 6.5%, I beg your pardon, and EBIT margin saw a downtick of 148 basis points, but this was largely penciled in already. The board has declared an interim dividend of 18 rupees, per equity share of rupees 2 each. We also have a couple of brokerage notes that have come out. Citi has maintained a neutral rating on HCL Tech, setting a target price of 1,510 rupees. Nuvama has taken a more optimistic view, rather. They have taken a buy call on the stock and they've set the target price to 1,700. They've pointed out that the revenue growth guidance for FY26 was above the expectation, which supported their bullish stance. Morgan Stanley assigned an equal weight and the target price is 1,600. So on the back of inline set of numbers, HCL Tech is a buzz.
Well, a buzz and the biggest nifty gainer in the market today, almost a 6 to 7% hike coming in. But let's also go across and listen into what C. Vijay Kumar, the CEO of HCL Tech, had to say on the company's outlook post their quarter 4 earnings.
With respect to our pipeline, we are very pleased with the health of our pipeline. It continues to be near all-time high, even as we experience healthy conversions in Q4. The pipeline is supported by multiple deals across IT and business services, engineering services, and HCL software business. Looking ahead, we believe enterprises will accelerate AI adoption to enhance efficiencies and drive innovation. Generative AI has two facets. At the time of contract renewals, we expect both pricing pressures as well as new revenue opportunities. We believe discretionary spending will continue to be subdued in this environment. Geopolitical factors like tariff and deglobalization are expected to impact IT services. In the coming months, it will be an important topic to observe and monitor the ongoing development. As I look beyond the uncertain short term, I strongly believe there will be strong growth opportunities emerging out of the market uncertainty.
All right. With that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you some more buzzers on the other side.
Hi there, welcome back to Market Fatafat. Time now to keep on going with all the big buzzers in today's trade, and let's get you a tech check on the Rani ports. And Akshay, you've picked out this stock for us. Last 6 months, the stock is lower by roughly 7 to 8% YTD as well. The stock has not done all that much. However, last 1 year as well, a 6% cut coming in. Do you believe that all of this consolidation is now setting the path for some kind of recovery on the stock, or do you believe that flattishness is still on the cards for this one?
Yeah, so absolutely, I'm of the belief that the flat nature of price action, which we have been a witness to in the last 5 to 6 months, should give way to a momentum-based rally very soon. On the technical charts, there is evidence that the strong support of 1100 is the base which the stock has charted, and now it is time the momentum should catch up. So right now we are dealing with the support zone of 1200, which is an immediate short-term support, and going by the chart patterns, my prediction is the stock should be heading soon for levels of 1375 to 1400 from a short to medium term scenario. So the trade is to be on the long side. Short-term supports 1200, stop losses below 1175 for potential targets still around 1375 to 1400.
All right, that's Rani ports on the charts. But coming to you, Gaurav, Axis Bank is the name that you picked out for us. Axis is an earnings candidate. It is set to report its quarter 4 earnings tomorrow. Tell us, what can we expect from the quarter 4 results?
Whereas when we talk about Axis Bank, now the street is factoring in around 7%, 7 to 8% growth in terms of deposits. And when we talk about advances, they're expecting 8 to 9% growth in terms of advances. And the reason being that there may be a slowdown in Axis Bank, and as a result, when we talk about net interest income, that may go up almost by 6 to 7% on a year-on-year basis. On the other hand, other income is usually stronger for fourth quarter, but given that advances growth is likely to remain a little soft, that is the reason why PPOP is likely to grow somewhere in the range of 4 to 5%. But on the other hand, when we talk about profitability, we may see a decline of around 4% in terms of profitability because provisions may go up. Now, credit cost, there is no big concern in terms of the asset quality, but credit cost normalization is what we may see in Axis Bank, and that is the reason why credit cost may also inch up a little to 0.9%. Lastly, when we talk about net interest margin, now the street is penciling in 3 basis points of fall in net interest margins, but on the other hand, let's not forget that big banks who have already reported numbers actually reported a positive surprise, and that is the reason we are also expecting some kind of positive surprise from Axis Bank. But all in all, good set of numbers is what we are expecting from Axis Bank without any kind of concerns in asset quality.
Okay, sounding rather optimistic when it comes to Axis Bank. Let's move on. And Akshay, you've picked out Wipro. It's been an earnings candidate. Tell us what you're spotting on the charts for these large cap IT names, especially Wipro, and tell us what's the next levels you're spotting. Last 3 months itself, the stock is low by 22%. Tell us what's the outlook here.
So IT is the flavor. In the last couple of days, there has been a very strong recovery in most of the IT names. If you look at the broader positioning, most of the stocks in this sector were beaten down. They had a lot of short positioning, and a lot of short squeeze is what is pulling these stocks hard in the short-term scenario. Now, Wipro is one stock where technically the trend on a medium-term chart is still down, but what I'm looking at right now is basing out formation at the levels of roughly around 235. The results have been done and dusted, and I believe the numbers were pretty good. The reaction has not been so strong as of now, but with the recovery in the IT pack, my sense is that Wipro might make a small comeback. A pullback rally till 255 to 260 is in the making. That should be the target you should be working for with a stop loss below 234.
All right, that's Wipro on the charts. But coming to you, Rabinder, you picked out Havell's India for us, and an earnings candidate and a stellar set of results coming in for Havell's. Tell us what does the report card look like? Take us through it.
Well, as Havell's India is in focus, where the company has announced its Q4 number, and the company reported an revenue of with uptick of 20.2% year-on-year basis, led by a strong Lloyd business, which saw a 40% uptick year-on-year basis and a sharp rebound in cable and wire segment. And company's net profit also saw a 16% uptick year-on-year basis at rupees 518 crore. Though cable and wire and Lloyd business drove a solid Q4 beat, but B2C demand was muted amid continued inflationary pressure. Even management pointed to a slowdown in summer products categories during April due to a delay in summer in North and South. And management to ET now say that the FY26 capex plan will be 1200 crore, and for next 2 years capex will be 2000 crore, and part of the capex will go in enhancing capacity of wires and cable and manufacturing of refrigerator and R&D. And there are also some brokerage note coming in where Nomura has maintained their buy rating with target price of rupees 1873, whereas HSBC also maintained their buy rating with target price of rupees 1718, and CLSA has maintained their accumulated rating with target price of rupees 1915. After management pointed a slowdown in summer product categories during April, stock is down 3%.
Okay, so that's the pressure coming on the stock despite good set of numbers. Weak commentary from the AC segment, and that's the reason why the stock is in pressure, 3% cut coming in. But let's also go across and listen into the management, because Anil Rai Gupta, who is the chairman and managing director of Havell's, he shared his guidance and capex plans for FY26. Let's go across and find out.
I believe the margins have been quite decent and coming back in all businesses, not just cables and switchgear and Lloyd. I think ECD is doing well, it's improving, and lighting has always been traditionally a high margin business for Havels. So we should be expecting a very good FY26 for all businesses. Last year, capex was about 750 crores. This year, the plan is about 1200 crores. And over the 2 years, this year, coming year and the next year, we should be looking to invest about 2000 crores. Part of the capex is going in developing the new refrigerator business, also enhancing the capacity of cables business, also in setting up a new R&D center.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you some more buzzers on the other side. Stay tuned.